and welcome back to the Property Frontline. I'm here again with Scott Hoaxang, and we're doing our Market Watch session for data that takes us to the 31st of August 2024. So we'll be looking at what's happened in the market up to that date, and also looking at market influences that will tell us where prices are heading for the next couple of months. And in this episode, we'll also be covering off the topic of what can you buy for around about $500,000. So let's get started. So Market Watch, yes. So the first thing we're going to do is look at the CoreLogic Home Value Index. And of course, CoreLogic gives us a couple of different cuts of this data. I know it's a bit blurry, but anyway. So this top chart is all dwellings, so units and houses combined, and houses and units. So what we will typically do is just follow the houses line. And so let's just run off these numbers, Scott. So for the month ending in August, Sydney houses were down 0.3.
Sorry,
Melbourne,
up.
sorry, up.
Yes. It's a little blurry,
Yeah,
but up
yeah,
0.3%.
definitely up. Melbourne down 0.2, Brisbane up nearly 1%, Adelaide chugging along at in an increase of 1.4, Perth 1.9, best performer, Hobart tanking by 0.4%, Darwin flatlining really by 0.1, and Canberra down 0.3. So that's that one. Now, this is the SQM data, and we've talked before in our Market Watch sessions, but why is there such a difference between the CoreLogic numbers and SQM data? And Scott, it's the asking prices, correct?
Yeah, I think it's our belief it's a bit more of a forward indicator. These properties have not sold yet and may give us a bit more of indication of where the market is going to be in a month or so.
Yeah. And so looking at the houses for SQM research, they say for the month that Sydney is going to be down by about 0.4%,
Hmm.
whereas CoreLogic said up until the end of August, Sydney was up 0.3. Then they see Melbourne going down by 0.3, Brisbane really spiking up by 2.8%, Perth still performing well, an increase of 3.3, Adelaide 2.4%, Canberra really dropping 3.7, Darwin a little blip up 1.7, Hobart flatlining at 0.1%. Yeah, so that's that. And then the next one, so this is prop track, and what we couldn't get from prop track, really, which is kind of like the realestate.com big data center. So with this data, we're looking at all dwellings, so units and houses combined. And do you want to read these ones out,
Sure.
Scott?
We've got Sydney up 0.32%. It's actually right on with the CoreLogic number. Melbourne down 0.18%. It's pretty close to the -2% CoreLogic had them at. So those two are actually pretty close, even though this is dwellings. But
Yeah.
then our higher growth markets show quite a bit lower growth on these stats. And it's probably due in part to the mixture of units in with houses. So we've got
Mm.
Brisbane only up 0.35%. I mean, we were up over 2% in some of the other
Mm.
data sources. Adelaide up 0.45%. And our champion market, Perth, not even up 1%, up
Yeah, weird.
0.79%. Hobart doing a little bit better, up 0.63%. Darwin a bit weak, minus 0.27%, and Canberra flat.
Yeah. Okay. And so the next thing, I just have to do a little bit of a twist because next we're going to look at the CoreLogic Home Value Index. Once again, this is all dwellings. And for someone like me, like I prefer the graph, not the numbers. So all dwellings, and you can see what they've said. So mirroring prop track. Sydney up 0.3, Melbourne down 0.2. But then Brisbane, they've got Brisbane going up by 1.1, Adelaide 1.4, and Perth up by 2%. So this one isn't really reflecting the fact that there is much more of a drag. Like PropTrack was saying, that units were dragging the home value index back a lot more. Um, mm, then Hobart down 0.1, Darwin down 0.2, Canberra down 0.4, and the combines, which doesn't really help much. Yeah. So there is a trend there. It's really like the BAPs. Is that what you call them, Scott?
BAPs, BAP markets.
BAP market, yeah, which is your kind of secondary PAPs. Um, yeah, are doing really well. And we believe this is largely because that's where there's a lot more lower price properties or more affordable properties. And so people have gone out to those markets to, try and get some value and some good rental return.
Yeah.
Mhm.
I think it's
Okay.
a trend following COVID as well. I mean, we saw so many people move to Queensland,
Mm,
post-COVID, leaving places like Melbourne. The jobs market out in Perth continues to be very strong. It's been
yeah.
some news around a few mines closing. We are watching it, but
Mm,
stats here clearly show full steam ahead for Perth.
yeah. Yep. Okay. Alrighty. So that's what happened in the past. And so now what we want to do is look at what's going to happen next. And of course, the big news as of the 19th of September was that the US has made a change. Over to you, Scott.
Yes, and of course, I've been following this closely, especially with my background. Fed Chairman Powell slightly surprised the market, I would say, they're calling it a jumbo-sized rate cut of 0.5%. Many people had been thinking 25 basis points was going to be the number, but if you actually looked into where the markets were betting, there were just as many people betting on this size of a cut. So I
Um,
actually was not surprised and made a little side bet with a friend of mine back in the US actually last night. And he took 25 basis points. I took 50. So he, uh,
well,
he owes me a lunch back in Indiana when I can finally get back there.
maybe after the election.
And what does this mean for the US economy? I think there's some concerns that it's maybe weakening more than what we're reading out in the news. So there's a bit of alarmist that is a larger rate cut. Uh,
Mm,
Personally, I watched the rate hikes going up. I was saying to Debra earlier on, I mean, the Fed hiked rates, if you'll recall, 4 times in 4 months, and they went up 0.75%, each month. So they were that far behind the curve. So it doesn't shock me that they would announce a cut of 50 basis points. If you
mm,
read into the minutes and so forward, they are sort of intimating that we may see another 50 basis points of cuts by Christmas, so that'll
well,
bring America's interest rates down 1% by end of year. It's a pretty hefty change for homeowners there.
and of course, I think New Zealand's cutting as well. So uh, it I guess shines a light on what's happening in Australia. Mm,
Yeah, and everybody needs to keep in mind that these interest rates do drive our currency rate. So when a country cuts its interest rate and another country doesn't, its currency tends to weaken. And it puts pressure on other countries to sort of cut as well because they don't want the price of their exports to go up. We're
Mm,
all kind of fighting slowing economies, and if everyone's cutting and you're the last man out that's not cutting, your currency will increase, and all these things we're trying to sell to people overseas will cost a lot more in their local currencies. So that's kind of the big picture of what's going on there.
yeah. Okay. Alrighty. And so on to our next topic or our focus for this this session. So what we wanted to cover off is, with all this talk of how expensive property is, let's see what we can buy for around 500,000. And so what we've done is we've reviewed two stories that were put out by the two big data portals.
Hmm.
So this is a story, they were released earlier this year, but realestate.com put out a story about trying to find property with loan repayments under 550 per week. And Domain put out a story about what you could buy for around 500,000. So I'll just very quickly walk you through it. So this story, and I will provide the links in the description below. But this story I quite liked because they did cover Australia wide.
Hmm.
Um, yeah, so what realestate.com has done, they are really pointing to the like Central West, really outer regions of the capital cities, where you can see, you can buy some affordable properties. Will that mean that young families will want to move out there? Well, only time will tell, but usually doesn't happen that way. Or people might buy out there and then kind of regret it. Would we recommend it for investors? Well, it really depends on what your strategy is. We'll come to that later.
Hmm.
And then the Domain story was quite interesting because they just covered Sydney, Melbourne, and Brisbane. So once again, they're focusing on what can you buy for under 500,000. And so they say, so in Sydney, they've nominated Blacktown, Central Coast, Baulkham Hills, Outer West, like Blue Mountains, Southwest, and Northern Beaches. I don't really think that they've picked up on this story some of the little pockets that we would recommend. So I've found today, so we're talking in September 2024. I found today properties definitely in Parramatta units, definitely older style. Um, and also Penrith and Campbelltown. Of course,
Hmm.
Penrith and Campbelltown in southwest Sydney are going to get this big boost because we've got the international airport, heaps of infrastructure. That's where the baby belt is. So, we would say there's lots of drivers there. Then in Melbourne, they've Domain's nominated these particular areas. As you know, I've been very public about avoiding Melbourne.
Yep.
You're buying there if you're not really negotiating an extremely good purchase price, you're going to be underwater when you buy. But you're more liberal. Would you say that? Scott?
Yeah, well, I think
Yeah.
a little bit more lighter with home buyers, I think. For investors, I'm 100% with you, just not looking for investment properties there in very rare circumstances. But a home buyer who's maybe seen a price drop of 5 or 10% in his favorite suburb and can now buy
Yeah.
a house they could not buy a year ago I mean, there's a lifestyle aspect to that and getting into that house, having it with your family. It's kind of understandable that somebody might jump in and buy something they perceive to be a bit of a deal.
As
Uh,
long as they're getting a very good deal.
yeah.
Be very careful. Okay, and then in Greater Brisbane, so there's more of a range, according to this story,
I
of
I am
what you can
shocked to
buy.
see that 48% of the properties down in Logan and Beaudesert are still under 500,000. I can only think that that is just picking up a lot of really older one and two bedroom units down there because in the days of finding any old houses in the Brisbane region up there for 500,000, I mean, I think are pretty far behind us. I mean, Deborah, you were finding some around Ipswich, what was that, 6 months ago? Or I know you and I talked about it back then.
Yeah, but not for 500,000 now.
Yeah.
So we were looking in that in that sort of outer western belt. So suburbs, say from Redback Plains into Ipswich. And look, there's still lots of good value there, but and like those areas have been going up like 20, 50,000 per week. And so now property that we would have bought, say, 12 months ago for around 500,000 is now 650, 700.
Yeah.
But it's still got ways to go. But there are, yeah, like we're buying, pure, beautiful houses.
Yeah.
Like for under the 500,000, you can buy townhouses
Hmm.
and yeah, definitely the units. Okay, so that's kind of like the positive story. The news is that you can still buy. I'm sure you'd be making compromises. Didn't you say there's a guy that, I don't know whether he's a client of yours or not, but there's a guy who's a bit obsessed with hunting down $300,000 properties in New South Wales, and that's all he does, and he's doing quite well from it.
Yeah, well, it's probably one of his price point up to 500,000, and they are more
All
in
right.
these regional Queensland markets at the moment. But
All right. Yeah, well, let's get to those.
yeah, yeah,
Yeah, so let's talk about this. So this is the CoreLogic, very legit, good data house. And so this is their monthly home value index, and they've included this analysis um, from their data set up to the 31st of August. And yeah, like what drives me crazy. Um, and I think really, like you could look at any of the states of what they've actually said. The This is a list of the areas with the highest 12-month value growth
yeah.
dwellings, so houses and units. And this is where people get into trouble. Do you want to like talk about this, Scott?
Well, I mean, there's a couple of regional Queensland markets on there we know quite well. Areas like, Gladstone is very mining dependent up there. I mean, they have had a large gas development business, and a few people are moving up there to work on projects. It's a little shocking that it has grown that much, but it just really feels like a market that's going to be quite spiky, and it may have
Yeah.
a short-term price growth up. But then are we buying into properties that are just going to go flat for years after that? Townsville and Rockhampton all over the news, hotspots, Terry Ryder kind of promoting them. And again, we're sort of seeing good growth up there. But big picture are these long-term viable markets that have a good set of growth drivers that are going to give you growth over not a 1, 2, or 3 year period, but over a 10-year period.
Like a lifetime. Yeah.
I mean, do you really want to go into a market that's going to go up 20% in 2 years, and then if it's going to go flat, you're going to sell the property, take your gain, and go home? I mean, part of me is like, was it even worth my time?
Yeah.
I've
And
done all that work.
you're lucky if you do get the gain, because what we normally say about areas like this or a data set like this is if someone's saying it's a hot spot, it's typical that like once it's made it onto the data records, because that's what's happened in the past, well, then the heat is gone. So following, this as a decision-making tool for where to buy next, is a recipe for disaster
It's
from my
very backward
perspective.
looking. Yeah, I mean, the markets have already moved there. And if anything, when these regional markets have a spike of growth that is that quick, they're becoming very expensive for locals to buy in there and rent there. And without large wage increases, um, I think you are at risk toward a long period of low growth. Also on that list was, I mean, we see Southport on there. Well, that's a much more expensive market on the Gold Coast. Mackay's on there. Again, mining exposure, agriculture. Um, People are trying to escape the Sunshine Coast and the Gold Coast in Brisbane because they're just kind of priced out of those markets. So there are people that will move out of them to the Harvey Bays and the Mackays, but you're getting a lot of retirees moving into those markets. What we really want to see is strong employment growth, lots of opportunities for working families. You really want to see that local economy doing well. And I think a plan for the next 5 or 10 years before we go in there. I mean, also in Townsville, I mean, if older houses are selling for 500,000, I mean, we can build new ones there for 550 and 600,000. So, that the old ones are not that much cheaper than going in there and getting a block of land and building, which is kind of another thing you need to be thinking about is, am I reaching a plateau?
Yeah. And of course, my view is, look, Southport, look, I would rate that because you can see in Southport, it's got those factors of a lot of people moving there. They're right on the coast and kind of a satellite of Brisbane.
Hmm.
So it's got those things of like a good family demographic, lots and lots of jobs, and there's not very much left to buy. But places like Gladstone, Townsville, Rockhampton, Mackay, um, yeah, like no, no, because what are the industries they've got there? Maybe a bit of tourism,
Hmm.
um, the mining. Townsville's got the army base,
Have
but
military ramping up. Yeah, but that's only
yeah,
going to go so far. And the military does build a lot of its own housing too. So you really
yeah,
should be careful about that as well.
yeah, but like really legit population growth going there, no.
Hmm.
It's people being transferred up there because like there's not enough people to work there, and they're gonna like get their money, and then they're gonna come back. It's just a big red flag. Um, and is there like a really long-term government focus on these areas? No, it's like a couple of industries and that's it. It's not like the areas that you favor and that I favor, like places like Sunshine Coast and north of Brisbane, where the government's like throwing money, like building transport links, putting money into hospitals, just like ramping up as much as they possibly can because they've got to service all the people that are moving there.
Yeah.
So don't just look at like where is like what some people do, what like they'd run their finger down this line and go, oh, Gladstone, 24%, I'm going there. Do
Yeah.
that because you'll lose money. But anyway, I guess that's a bit of a rant. Is there anything else that you would like to say before we wrap up today?
No, I think that pretty well covers it.
Yeah, I know I'm so negative about it, about the data sets. I should really, it is my bias, and I
Yeah.
should say
I mean,
that.
I
Yeah,
do get a lot of people that will call me up and they say my budget's 500,000, and I typically will say, well, maybe you shouldn't buy right now. Maybe you should see if your borrowing capacity is going to increase in the next 6 months. If we get some interest rate cuts, if you get a wage increase, build some more equity in your portfolio. Do you maybe just want to wait a bit and see if you can buy in a better area? Because we're only going to buy so many properties in our lives. And I'd rather buy 3 gems than 5 average regional properties that are just slowly chugging along year after year after year. That's just my belief and my philosophy.
And don't forget, more and more, you can buddy up with someone.
Hmm.
So is there a really good friend or a family member that you can buddy up with and like get a good start instead of one of these random starts?
Hmm.
But anyway, so thanks again for visiting us today. Next time on Market Watch, Scott and I will cover the distressed listings issue. We are starting to get many more inquiries about that, but like how long is that going to last if the interest rate's going to drop soon? But if you would like some help buying your next property, you can contact Scott or me. So if you want to be notified of any new episodes, make sure you subscribe, and our contact details and also the links that we discussed today will be included in the description below.
All good. Signing off.
Okay, all right.
Goodbye,
Thanks
everyone.
again.